Hello guys, glad to have you on the board again. Today we're not gonna make a scalping show today. It's gonna be way too complicated. We still have Fed's Powell about to talk, and yes, I'm fed up with this stock market. It's not even a market to me, I guess. So I'm just gonna wait for an actual price signal. Yeah, I know I rarely say that. Normally my job is to anticipate, and I do anticipate anytime I have the options to do it. But the problem is we're invalidating another set of signals and stuff like that. So it feels like, yeah, risk management is not even the case anymore. We don't care about risk managing, and like I said, it's still the same loophole. I'm going to show you this. I think I shared it on Twitter. I don't know if you guys saw it because it's most likely for French, and I rarely do English stuff in here. Let's do it. Alright, so that's what it is. I showed you this thing, so it's helping you understanding the problem we have right now, alright? Because this is what should price the market down, because that's the normal loophole that the Fed should be having under control, right? Which means the problem is there. We can see that economy is decreasing forecasts, so less better, worse forecast for the futures, all right? So the thing is that generally what it does is that people are selling risky assets and asking for safe haven demand. The problem is when investors are asking for safe haven demand, they generally have to sell the riskier assets, all right? You need cash to buy some stuff. Like you want to buy some gold, you're going to have to sell some stocks to buy this gold, to get the cash, all right? Because institutional funds have to be invested like 95% of the assets, just 5% cash. So most of the assets are already invested, so they need to sell to buy some other stuff. The problem is when we perceive some risk, we sell the riskier assets to buy some safer assets, and that's exactly what the Fed doesn't want. The Fed doesn't want the risky assets to be sold because they know there's not enough liquidity for it. So it's going to create a liquidity crunch, meaning that there is high risk to create a speculative bubble, to create a credit bubble crash. So what they do is that they talk with the financial institution. The financials do what I do. They risk manage. They say, all right, we see the risks as well. So how the fuck do we deal with it? All right, we got two options. Either we sell riskier assets to buy safe haven, or give us another option. That's exactly what the institutionals are saying to the Fed's officials. So what did the Fed officials said? He said, all right, you know what, we're going to give you free money. We're going to give you money to buy for safe haven without having the need to sell your riskier assets. So that's a deal. I give you free money with very low interest rates. I'm going to cut interest rates so the money will be available for you to buy safe haven and to compensate for the risk balance. But you don't sell the goddamn riskier assets, all right? That's the deal. That's probably it. Or if you sell, you do it very, very carefully. You make sure that you don't make the entire shit collapse. Otherwise, we're all losing, all right? So everyone's winning with this game. So this is a normal loophole, something I could definitely understand, all right? The Fed forcing the institutional not to sell, I can definitely understand that. For both sides, like what the Fed is doing is definitely what they should do, preventing some market crunches because we have crazy high levels of credit in the market, and prices going down too fast may create the bubble to burst. So we don't want this to happen. So the Fed is saving the dips to prevent any market going down. That's fine, and they give up the money so the institutional can balance the risk by buying some safer haven demand. All right, simple as that. I can understand that thing. The problem is there is a second loophole, much bigger loophole, that is absolutely not controlled by the Fed and not even addressed by the Fed. And that's the big problem. Like I said, the Fed is probably aware of it, but they don't even talk about it, and they really should do it because it leaves an open door for speculators. All right. The problem is when the Fed goes more dovish, they putting down the interest rate, they altering the risk, the interest rate curves. So what does that do? It just brings credit very, very attractive. So what do? We've got some speculators who said, all right, credit is pretty cheap, liquidity is low, so we can manipulate the market. It's easy. We take the free money, we play with it, we fuck up the liquidity structure because no one's trading, so we can make the prices or actually impact prices with not so significant amount of monies. So we just need that money, and the cheaper that money is, the more we can impact prices, right? That's how speculators think. They said, all right, unlimited credit, and it's even gonna be better tomorrow. Like we're gonna have rate cuts, so yes, even cheaper money, which means cheaper interest rates, bigger profits. All right, that's how those guys think. They don't go anywhere like risk managing. What they do is profits for losses. The problem is with those guys, all right? Like I said, we would say profit losses is the same as risk rewards, all right? No, they're not. They're definitely not, because those guys, they don't nearly even think like that. They say, all right, what I risk is everything. I risk it all, and obviously I'm going to make some shitty fucking gorgeous profits, and I'm going to take a freaking nice bonus in between. Like I said, those guys don't nearly care about where the market is going to be 6 months from now. They don't even care about where it's going to be 2 weeks from now. These guys are just getting in by the morning, seeing whatever market is weak. They're going to ask for some money to manipulate this market, and by the end of the day, they take out the money and they move on to the next day. So what they do is they search for the weakest and the most manipulable market for the day, and they'll take advantage of it. That's just absolutely stupid, because that's not how the market is supposed to work. And the problem is you're giving even more credit to these guys, all right? So what they do is they just anticipate the retailers. What they do is that they're printing emotions on prices. They're bringing prices to some emotional states in which retailers are buying, and they're selling them the shit. So what they do is that they trap retails, and the retailers, instead of getting fucked like they would be in a late stage trending market or whatever, right, is that these guys see weekly trades where those guys see minute trades or daily trades. So these guys are trapping those guys, but normally those guys end up being fucked. But in here, instead of being fucked, they're saved by the Fed loophole, because what the Fed is actually doing is preventing from going below any support level. So even if you make a dumb call, like this is what the retailers will do, all right? Retailers started buying in here, they bought the top, the price went down, but they said, oh, no, it's never going to break a support, so it's not, and bam, magically Fed is showing over. And now someone who's made a pretty fucking shitty trade, buying a resistance, buying historical highs, have been suffering that kind of loss. So 7%, they were nearly crying, but they still had hope that the Fed will save their asses. And guess what? It worked once again. Bad trade turning into a good trade. So what it prints as a motion into those retail traders is that no matter what, it's always going to be fine. And that's the big problem. Someday it won't be fine, and those guys will think the market will pull back. Does that even remind you of any mindset of what's been happening recently into some other cryptocurrency assets? That's exactly it. They think it's never going to go down, and when it obviously will go down, they'll think it will obviously have to go up again. They'll think they will be saved any fucking way, because no matter what, it's always has been like that. No, it hasn't. We're not trading normal. We're trading pretty fucking dangerously abnormal at the moment, but people think that's the normality, just like it was with Bitcoins. So now let's talk about them actually. So that's the reason why stock market, I don't nearly give a shit about that anymore. It's not even something to trade. So let's have a look at the technicals right now with BTCUSD. So yesterday has been quite a day. Today has been as well, as we instantly validated yesterday's reversal. So now the bulls have just one chance, all right? It's to bring prices to the upside and to make a lower shadow candle. And even if they do, I don't nearly even think it's going to be enough to stop it. So in here, what happened is some people said, all right, it's because Fed's Powell has been talking about Libra and said it's not viable as long as you haven't been dealing with money launderings and stuff like that. So news flow, all right, and people are trading the news flow. Worst case scenario as usual. So the thing is that we traded speculatively this area. So like I said, this market is getting speculative again. So it's hard to say what the actual outcome will be in this area. All I can tell is that it's been quite a while since Bitcoin hasn't been trading risk management. So, you know, a bubble is like a crazy fucking stupid trend. So the problem, the thing is that anytime the bears try to risk manage, it didn't really hold. I remember in this area, I was ready to profit take slightly lower. They just trapped me and take down my stop loss at break evens. That's exactly what a bubble does. It forces bears out, all right, and it forces them not to risk manage. So the goal is to trap the bears so we can take their losses or their stop losses to rise from ashes, all right? We rise because we kill the bears, and anytime volume shows up, prices stop and digest, all right? So in here, like I said, it's the first time in line that we've had volume significantly rising with negative market tops. It never happened so far. So what we have in here is different. Like the bears can finally risk manage. We've got some volume showing up out of higher lows. lower highs. Sorry. So it's raising some concerns. I'm not saying that we won the battle, definitely not. But all I can say is that in a technical perspective, what we have, yes, is kind of a concern for the bears anyway. I'm going to just explain this. Pure technicals once again, no subjective analysis, otherwise it's pretty fucking worthless. So let's do it, all right? What we have is this, all right? Lower low on momentum, higher, lower high as well. And we might be terminating an oscillation. Look at the oscillator back in here. We might be terminating a bullish oscillation. So if we terminate this, fail to make a new high, what we're going to have is a major momentum contradiction, all right, with now probably a bearish oscillation to come, which means we're probably going to break down this low. And as we broke it down, the next support level is going to be this one, all right? So the question is, how are we going to be dealing with this area? Is this going to be a support or is this going to be a resistance? That's the next day's big questions. All right? We're going to go there. That's pretty much, I rarely think it's going to be any different. I hardly think it's possible for the bulls to sustain any more bullishness in here. So the big question is this. If we have a negative momentum and prices going down, how low are we going to go? That's the actual question. If we just go there, all right, and some way we find some support, the bears are calming down, the bulls are taking it over, and we build some other triangle, whatever structure, I would say that's not that big of a deal. We'll have a pretty fucking positive hidden divergence, like we make new lows in here, right, but not on prices, right? This would be somehow positive. But anyway, just look at the volumes, all right? This is volumes to the upside. After dealing with this volume, we had to go sideways for quite significant amount of time, right? Then, no more volume, bam, we're rising like shit. We see some volume again, we have to go low, right? Now we see even more volume. Just look how freakingly big the recent volume we had is. So you really think that we're just going to go like that before doing that? There is an end to those structures. There always is, all right? So, pump, we pump, we digest, pump, digest, pump, digest, pump, big volume. So you may think that we're obviously going to digest and pump again. These are what? Endless cycles? We're going to pump forever? Is this really what you think it is? No, it isn't. There is someday we'll stop, and the problem is that structure doesn't build supports. We leave supports behind. We're going to have to test them all, and we're probably going to do them in a row. Like, from my perspective, this is how we do, all right? First of all, we're going to go there, and if we can sustain some support in here, that's going to be nice. But normally we go down to the previous supports. We fill all the gaps we left in between. So I'm sorry to say that, but what we have in here is we're going to have a negative momentum, and the only reason, the only structure that can somehow save you is that if you manage to sustain price in this area and let the momentum like going slightly bearish and then bullish again. That's the only solution, all right? Like digesting the bearish demand in a sideways action in the forthcoming days. I'm not saying that this won't happen. I don't know. All I'm saying is that I'm a trader. I give you my forecast. That doesn't mean this will happen. I give you what I think is the most probable stuff to be. I know those structures. I know that when the doubt is in, generally it collapses. I've seen, remember the liquidity crunch we had in here? Like a $700 spread and some strong slippage for the bulls have been stopped out, but sometimes $700 or $800 lower than their stop loss was set to be triggered. So yes, it doesn't nearly is a good sign, all right? That doesn't necessarily say that this is the end of the world. What I'm saying is that huge volume, and the highest volume we've ever had in this bullish market, in this bullish bubble market. So if we stay there, we're going to have to stay there for quite a while. And if we do, then that's fine. If we're retraced, then don't come cry. It's absolutely normal. We rose like crazy, like spitting some money out of this would just be normal, all right? Don't think that going down in here will be irrational. Was this actually rational? No, it wasn't. Everyone knows about it. So paying for this, it's not going to be abnormal. If we don't, then we're going to have to stay there, like I said, for a while, for quite a while. If you think we're ready to launch pad by tomorrow or whatever, now I think it's very less likely going to be. I was having quite some doubts when we built this bottom that we could eventually rise one more time to historical highs, not historical highs, but to the next resistances and stuff like that. Now that I've seen that we reversed out of this very dense technical area, and the way we reversed out of here, I would say, no, this target is probably, when we triggered it, right, when we tried to break up, was probably the end of it. Like, this is the FOMO trade. When the bulls started to buy, bam, that's the end, right? This is where we have the feeling of breakout. This is where we feel like we're accelerating, we're strong. That's exactly the moment we reverse in ranges. When you feel when you think you got it, when you think trend in a range is exactly where it ends. So we'll see about it. It's a dangerous kind of context, as we clearly fucked up the daily context, but what I have in front of me just suggests, all right, you know what, now I'm a bear, now I'm secured, I take barely no risks, so I'm fine. You know what, if it goes down, I won't be surprised, and I will take quite some money. If it goes up, I'm going to be stopped out with no losses. So as usual, I think I've just done my job, and no more than that. Now we have a nice pullback opportunity at the moment as well. All right, like 2 waves pulling back to the trend channel. We're required to go a little bit higher than that, so probably I would say close to the 38% fib. But yeah, probably in this area there's a pullback to come just to go for those levels, the weekly opens, right? And oh, and by the way, remember that the structures on Bitcoins is pretty different. So normally the trend isn't set by the first wave, all right? So we're set by the final wave. So don't be too trendy at the moment, all right? I don't think we're going to go necessarily straight line to the downside. There will be some risk management, like some pullbacks and stuff like that. It's always the final wave was the craziest. So if we have to retrace up to this price, I wouldn't nearly be surprised. I'll still be a bear, all right? We could do something like that, and just keep the best for the final wave, all right? So don't be too greedy, don't be too aggressive. Just, all right, normally if we're about to speculative crash, bear in mind that in terms of actual price structure and timings and stuff like that, all right, just think about that. I'll give you the clue. Remember, I think I said that already, but let's go 4 hour. All right, so let's assume that this is the first step, all right, top to bottom. So consider this as a dynamic, right, as a momentum. Normally, the momentum to go to this area is not going to be as fast. So in here, it will give us the 22nd of July, and like I said, it's going to be longer than that, all right? You don't know how long, you just know it's longer than that. So I would personally bet on August, like 3 weeks of bearishness, and there will be quite some pullbacks in the early stages. So if you think we're going to go like that, straight line, so you'll be easy, safe, safely selling, no, we're not. I just think that first of all, we're going to be tested and tested again before there's actually, bam, the actual collapse. So I would probably set this final move just right in here, right? Bam, we go down and we fuck it up. Okay? So be rational once again, and we might spend quite some time working out this area, like hesitating, and only for the bears, we'll only get our gain in the very late stages, all right? There is going to be hesitation all around the corner until we get to be proven right. When we'll be proven right, the bulls will capitulate, and they will probably surrender prices in the vertical line. But this will be the final stage, right? So let's assume that first it's going to be quite a pain trade. Bam, bam, all right? Leading us to August. I definitely think that's what it's going to be looking like, all right? It's like a structure, really hesitating, or flat, all right? We go flat in here, make a second impulse, we go flat, all right? Don't think there's necessarily going to be deep retracements, all right? That's the reason why I say you sell, you put your stop loss at break even, and just let it fucking go, all right? We could just go sideways, like there's not enough bulls anymore to buy, bam, we go another bearish impulse, all right? Just like they've done to the upside, all right? It's up, flats, up, flats, up. We can do the same thing to the opposite side and to the downside, all right? And obviously the final wave is going to be the deepest one. Okay, so that's it for today. I'm going to leave you guys, so I'm sorry, no scalping. Eventually tomorrow, I don't know what the hell's going to happen with the dollar. I don't know what the hell's going to happen with the stock markets. They don't feel like being markets to me. I'll wait until next Fed meeting, so we'll actually have this rate hike, this rate decrease, this rate cut, sorry, or whatever this is going to be. I mean, anyway, in between it's just a game for gamblers. So I'll let the gamblers gamble, and unless something significant shows up, I'll just do nothing. I mean, it feels like the market's going up or down, depending some very shadowy price action. So I don't know, I'll let the toy to whoever's ready to play with this one.